Introduction to MFRS. The foundation of segment reporting under MFRS 8, which aligns with the management approach, requires us to identify segments based on how our internal decision makers view the business. Crucially, an operating segment is defined as a component of an entity that must satisfy three mandatory criteria simultaneously to qualify for reporting. First, it must engage in business activities from which it generates revenues and incurs expenses. This definition explicitly includes transactions conducted with other segments of our entity. Second, its operating results must be regularly reviewed by the Chief Operating Decision Maker, or otherwise known as COTM. This review is essential for two key functions: allocating resources to the segment and assessing its performance against objectives. And finally, the third criterion requires the discrete financial information must be available for that specific component. Without readily available internal data, the component cannot be classified as an operating segment under the standard.
The next question is explain briefly the Chief of Decision Making and provide two examples of publicly listed vision companies. CODM is a function and not necessarily a person. It is to allocate resources and assess the performance of operating segments. It also may vary from entity to entity, such as the CEO, the Chief Operating Officer, the Senior Management Team, or the Board of Directors. To give an example, the CODM for Maybank is Dato' Sri Khairul Ramli, who is the President and the Group Chief Executive Officer for Maybank. The second one is CIMB Bank Berhad, whose CODM is named Gurdeep Singh Sidhu, which is the Chief Executive Officer of CIMB Bank Berhad in Malaysian operations.
One is business segment for Maybank's Berhad and CIMB's Berhad. Maybank's financial strength and breadth of service are structured around three distinct yet interconnected business pillars designed to cover the full spectrum of customer financial needs. Our foundation is the Group Community Financial Services, or CFS. This is the retail and SME arm focusing intently on individuals and smaller businesses. CFS provides core services like personal banking, consumer loans, deposits, and essential financing for small and medium enterprises. Secondly, we have Group Global Banking, GB. This segment caters to our institutional and large corporate clients, including multinational companies and governments. GB covers high-level activities such as investment banking, corporate finance, and global markets or treasury management. Finally, our third pillar is Group Insurance and Takaful. This business manages the critical area of risk and protection, offering a large range of products including general, life, and family insurance across both conventional and Islamic principles. In summary, by strategically partitioning our focus across CFS, global banking, and insurance, Maybank ensures comprehensive and specialized financial service delivery across all market segments. This is the snippet of Maybank's Berhad Annual Financial Reporting Report. CIMB Berhad. CIMB's operational framework is built on four distinct specialized pillars, allowing us to deliver comprehensive financial services across all customer categories and complex markets. Our first segment is consumer banking, which focuses on the individual client. This division provides essential retail services, including deposits, loans, and credit products for day-to-day personal finance. Next, commercial banking targets the engine of the economy, medium-sized enterprises. We offer talent financing solutions, cash management services, and trade finance to support their critical business growth. The third and most complex pillar is wholesale banking. As a leading regional franchise, it serves large corporations, institutions, and governments, encompassing investment banking, corporate banking, and treasury operations. Finally, CIMB Digital Assets and Group Funding manages our centralized balance sheets and strategic funding, while also overseeing key investments into future digital ventures. These four strategically defined segments ensure CIMB maintains a specialized focus and robust market presence across the entire financial ecosystem. This is the snippet of CIMB's Berhad Annual Financial Reporting Report.
For the second segment is geographical segment reporting. I want to briefly highlight how CIMB Group performed across its four main geographical segments, which is Malaysia, Indonesia, Thailand, and Singapore. The table shows two key metrics, net interest income and total asset. For the net interest income, the data clearly shows Malaysia is the core driver of profitability, reporting the highest net interest income at RM4.77 billion. Indonesia is a solid number 2, contributing over RM3.19 billion. For the total asset, in terms of scale, Malaysia again leads with RM465 billion in total asset. However, notice a significant asset base in Singapore at RM319 billion. This suggests Singapore serves as a major hub for large-scale operations like capital market or treasury, despite having a smaller interest income contribution than Indonesia. CIMB is anchored by its strong base in Malaysia, while Singapore is vital for scale and regional connectivity, and Indonesia drives significant core earnings. This segment report is crucial for understanding the overall strength and strategic focus of our operation across Southeast Asia.
For question number 4, we are required to identify two key benefits of segmental reporting. The first key benefit is that the segmental reporting provides a better understanding of the business performance. It shows how each business segment contributes to the overall result of the company. For example, in Maybank annual report, the bank report performance by a segment such as the community financial service, global banking, insurance, and takaful. This allows investors to analyze to identify which business line is driving a profit or which area may need improvement. Overall, this improves the transparency and help the user to make more information and decision. The second key benefit is the segmental reporting helps the user to assess the impact of the different economic environment. Company operating in multiple countries faces different risks and opportunities. For instance, the IMB Bank reports separately on its performance under various market conditions, such as change in the interest rate or currency exchange rates. As a result, users can better evaluate the company exposure to the risk and its potential for growth in each region.
MFRS 134 Interim Financial Reporting is a standard that covers financial reports for a period shorter than a full financial year, such as semi-annually, bi-monthly, or quarterly. This standard requires the entity to present the completed or condensed set of financial statements along with selected explanatory notes. Its main reason is to provide investors and other users with more timely or current information, and to enable users to evaluate the entity's financial position, performance, and cash flows on a continual basis. The core principle for recognition and measurement is that the accounting policies applied in the interim financial statements have to be the same as applied in the annual financial statements. Revenue earned in a particular period is recognized in that period, and uneven costs should be only anticipated or deferred in interim periods if they meet the criteria of anticipation or deferral at the annual year end. Other than that, the preparation of interim financial report generally requires greater use of estimation method than annual method.
When a bank issues new securities, it immediately and substantially changes its financial position. This represents a significant inflow of cash and a simultaneous change in liability or equity structure. For CIMB Group, increased its funding pool by issuing new debt including unsecured bonds issued by its subsidiary, CIMB Niaga Auto Finance, amounting to 1.6 million Indonesian rupee. CIMB Islamic also contributed to the liability growth by issuing a 500 million ringgit for a 10-year fixed rate senior sukuk. Main banks similarly raised significant capital, specifically mentioning the issuance of 3 billion ringgit senior sukuk murabaha in addition to other commercial papers. Impact on financial position: cash increases and debt increases by the corresponding amount. The balance sheet becomes larger, reflecting a stronger funding base. Both banks also increased their permanent capital through the issuance of new ordinary shares, primarily driven by employee incentive schemes. For the CIMB, the group recorded an increase in its issued share capital of 37.7 million ringgit, arising from the issuance of new ordinary shares under the long-term incentive plan. For the Maybank, it also increased its share capital by 141 million ringgit from the issuance of new ordinary shares arising from its employee share grant plan. Impact on financial position: cash increases and share capital increases. This activity boosts the bank shareholder funds, strengthening its overall financial resilience and regulatory capital ratios. The impact on financial performance: the interest or profit paid on the 500 million ringgit sukuk and the IDR 1.6 million bonds issued by CIMB and the 3 billion ringgit sukuk issued by Maybank are all recorded as interest expense or financing costs in the income statement. This recurring expense reduced the group net profit in the current and subsequent interim periods. By issuing new shares under the ESOS, both CIMB and Maybank increased the weighted average number of ordinary shares outstanding. For CIMB, the explanatory notes explicitly state the calculation for EPS. This increase in the share count, the denominator, causes the earning per share to decrease, making the bank profitability slightly lower on a per share basis compared to if the shares had not been issued. So, for the conclusion, the issuance of both debt and equity is a significant event that simultaneously alters the financial position by changing the capital structure and impacts financial performance by introducing new recurring costs and diluting per share earnings. For the dividend pay, the payment of dividends is a transaction that occurs frequently between annual reporting periods. It represents the distribution of previously earned profits to shareholders. This event causes a significant and immediate change to a bank financial structure. The impact on financial position: dividends payment directly reduces two critical accounts, which is the balance sheet or the bank financial position. The most obvious impact is the outflow of money. This decreases the bank's most liquid asset. For the CIMB Group executes a significant cash outflow for the payment of its single-case second interim dividend amounting to 2 billion ringgit, which was paid on March 27, 2025. On the other hand, Maybank had an even larger distribution, paying a single-case second interim cash dividend totaling 3 billion ringgit paid on March 26, 2025. The reduction in retained earnings. Because a dividend is a distribution of past profit, it must reduce the cumulative profit pool belonging to the shareholders. This reduces the equity section of the balance sheet. The cash paid out by both banks is simultaneously deducted from the retained earning portion of shareholders' equity. In the impact on financial position, the cash decreases and retained earning decreases by the same amount. This reduction lowers the bank book value and its total capital base. Furthermore, the impact on financial performance is critical to understand that a dividend payment is not an operating expense like salaries or rent. It does not affect the net profit or loss for the current quarter. Instead, its impact on performance is seen primarily in two areas, which is the cash flow statements and equity statement. The impact on cash flow statements: the most direct impact on cash flow is the CIMB and Maybank are recorded under cash flow from financing activities. This demonstrates the scale of cash being used to service shareholders. A high outflow here shows a significant shareholders' returns, but a reduction in cash available for strategic investment or asset growth. Impact on capital and future performance: by distributing these amounts, the bank is making an appropriate of profit. The smaller equity base can be viewed by regulators and analysts as a reduction in bank resilience, which impact future performance metrics and capital adequacy ratios. The choice to pay a large dividend while pleasing shareholders is a trade-off that affects the capital structure available for sustaining future performance.
For question 3, we're asked to identify the interim reporting periods for a listed company in Malaysia. Moving to the required reporting periods, let's start with the interim statement of financial position. The SOFD being a balance sheet uses specific dates for comparison. The current interim period is presented as at 31st March 2025. This is compared against the last annual reporting date, which is 31st December 2024. Next, we look at the statement that cover a period time, the interim statement of cash flow, and the interim statement of comprehensive income. This statement require a comparison of periods to gauge year-over-year performance. The current interim period is a 3 months period and then ended 31st March 2025. This is compared against the corresponding period in the previous year, which is the 3 months period ended 31st March 2024. Comparing the same quarter provides an apples-to-apples view of how CIMB profitability and cash generation have changed over the year, free from seasonal effect.
Next, we review the interim financial statement of Malaysia Banking Berhad, or MABANK, also for a quarter ended 31st of March 2025. The format and reporting period are consistent with the CIMB, reflecting the standard practice under MFRS 134, interim financial reporting. The statement of financial position show the figure as at 31st of March 2025 and 31st of December 2024, while the statement of profit or comprehensive income and statement of cash flow compare the 3-month period ended 31st of March 2025 and 31st of March 2024. Here, we can see the same interest reporting approach used by the MABANK, ensuring the consistency and comparability across the reporting period. In conclusion, both of CIMB and MABANK prepare the interim financial statement on a quarterly basis, as required by the Bursa Malaysia and MFRS 134. The current interim period refer to the 3-month ended 31st of March 2025, while the comparative period refer to the 3-month ended 31st of March 2024 or 31st of December 2024 for the year-end comparison. This ensures transparent and timely financial information for the investor and stakeholders.